Accounting cycle, adjusting entries.
So let's go through the example that we have here. This is about a company that had started on July 1, 2012, and during the very first months, these were the following transactions that took place. Now we have to do step by step and go first through the journalization of these transactions. And so let's look, and I have prepared already these T accounts so it would be easier for me to input the information. Now let's look one by one, at each of those transactions. So on July 1, the company issued 12,000 shares of common stock for 12,000 cash. Let's look at it. So what happens is that we get increase in cash, 12,000, and at the same time our common stock also increases through credit, 12,000. Moving on, we purchased used truck for 8,000, so it will be a truck account for 8,000. So we added a truck into our business, and we paid for it in part using cash. So 2,000 of it goes through cash. Now, how about 6,000? Where do we record the 6,000? It says that the balance of this, 8,000 minus 2,000, the balance of it, 6,000, is on account. So we record it into account receivable, account payable, $6,000. Next, we purchased cleaning supplies for 900 on account. So we can add here cleaning supplies account, which is 900. 900 we purchased it, and we purchased it on account, meaning that our account payable increases because we purchased cleaning supplies. Paid 1,800 cash on 1-year insurance policy effective July 1. So on July 5, we paid $1,800 cash. So it means that cash is out. We spent cash, and we bought insurance policy, prepaid insurance of how much? 1,800 to the debit entry. Billed customers 3,700 for cleaning services. So we provided service revenue. We already provided it on the credit side because revenue increases through the credit side. And now the customers owe us that amount. Account receivable will increase through debit, 3,700. We paid 1,000 cash on amount owed on truck. So and 500 on amount owed on cleaning supplies. So what happens that we paid at one point 1,000 and we paid 500. So cash 1,000 and in another case 500 is out. Now where do we record this 1,500 is so the amount owed to truck. Where do we record our liability is account payable. So 1,000 we reduce our liability 1,000 because we paid it. And the second time we reduce it by 500 because we paid for separately this cleaning supplies 500. So that's it. We reduced our liability by entering to the debit side and cash through the credit side. We paid $2,000 cash for employee salary. So paying cash again, it means that we have less cash now through credit entry. And employee salaries means that we have incurred salary expense. That is 2,000 into the debit entry. Collected 1,600 cash from customers billed on July 12. So on July 12, let's see where it is, the July 12, we billed our customers 3,700 for cleaning services. So cleaning services we showed here. The account receivable, how much they owed us, we showed here. Now we collected that amount. Collecting that amount means that now we are owed from our customers less. So we entered 1,600, and since we received that amount in cash, we added to our debit cash. Next, we billed customers 2,500 for cleaning services. So we showed cleaning service 2,500, and we billed them, meaning that our customers owe us now additional 2,500. We paid 290. Down. Okay, I add here pay 290 for maintenance of the truck. So we paid, meaning we gave away 290, and for what? For maintenance of this truck during the months. Just a second. So the account for that one will be maintenance expense. Yeah, maintenance expense is recorded through the debit 290. And lastly, we declared and paid $600 of cash dividend. Again, cash dividend is paid out, so cash is out, and dividend is increasing through 600. So we show that we paid $600 on dividends. Again, I need to add another line because I don't have enough space to balance out our sort of accounts. Yeah. So the second step that we need to go through is, so first what we did first is journalize transactions. Now second one says post to the ledger using T counts. Yeah. All we need to do here is balance these amounts. Easy to do. So we will sum this and deduct the summary of this. Just a second. Minus the sum of this. Does it work? Yep. Somehow. Yes, very good. So this is the balance of 5,410. Our balance on the common stock is the same because the amount is just 8,000 on the truck side. Now we have here 1,500 minus 600. Oh, sorry, this is account payable, so it has to be on the credit side. So 6,900 minus 1,500, and that's 5,400. The cleaning supplies remain the same, 900. That's the balance for the end of the period. This is pre-adjusting period. Here we have 3,000 plus 2,500. Moving on, we have account receivable minus the credit side of it, what we paid back, and 2,000 here, and 2,290 here, and lastly 600 stay the same. So this is it. We posted it. We have all of our balances. Now if we want to prepare our unadjusted trial balance, I did some unadjusted trial balance somewhere here, so let me just copy it because I don't want to bother with the sort of format of it. So I can right here post it, remove all of this information because it's irrelevant. This is not the information that probably will be, you know, here. So one by one I will start entering our accounts. So we have cash, we have common stock, we have truck, truck, we have account payable, we have cleaning supplies, prepaid insurance. Yeah, so you just input it all one by one. Account receivable, salary expense, and maintenance expense, and lastly dividend. This is it. Exactly how many I need. So the cash is on the debit side 5,410. Common stock is on credit side 12,000. Truck is debit 8,000. So basically you just post them one by one to the unadjusted trial balance. Cleaning supplies 900. Prepaid insurance is 1,800. Service revenue 6,200. Then 4,600 here. 2,000 salary expense here. Let me see this one. Maintenance expense 290, whereas dividends is 600. So as you can see, because we did all of it correctly, now the balance in the unadjusted trial balance is showing exactly the same. So this is all correct. Now the next step is, if I just go back and check, prepare a trial balance. We did that. Now we will, so yeah, number 3 was prepare unadjusted trial balance, and that is check. Yeah, now the fourth one, we will go through adjusting entries, and we are given those adjusting entries, and here they are. Yeah, so let me just copy to and paste here all of the entries, yeah, that we have to do. Just type it in. Okay, so adjusting entries are 5, and we will, after all of this, input them into our books. Now, I will try to change the color so that we can see more clearly the differences between, you know, it will stand out. Yes, the entries related to our adjusting entries will stand out. So the first one says the services provided but unbilled and uncollected at July 31 were 1,700. So what it means is that when at the end of the month they looked at their books, they realized how much the job they have done, and they understood that in this month, in July month, they have actually also finished and provided certain amount of services, but they just didn't have time to bill and send it to the customer, and therefore because the job was finished in July, they need to make these adjusting entries. And how do we make adjusting entry here? It's very simple. You provided service, but you did not bill it. You haven't basically notified your customer. So because you finished the job, the customer owes you money. Finishing the job is service revenue. 1,700 is an increase in the revenue, so I'll add it in the red color. And lastly, the second part of it is account receivable that has to increase 1,700, exactly the same amount, and I'll also show it red to point out the fact that this is adjusting entry. The second one is depreciation on equipment for months was 180. So here they don't ask you to calculate how much it is. They already have calculated the amount of depreciation. The only thing they want from you is to record that depreciation expense. And this will be depreciation expense will be recorded here, 180, and we will accumulated depreciation will be entered into here. Yeah, let me just accumulated depreciation will be entered here, $180. So again, I'll change the color to red because I want to show you that this is the adjusting entry. Next, 1/12 of the insurance expired. So if you remember, we had prepaid insurance before in original entries, but what happened is that 1 month of this 1,800, which was, if we look at here, was paid for 1 full year. 1 year worth of insurance, let me just show you the calculation, is divided by 12, is 150 per 1 month. Yeah, this is 1 month's insurance. Let me just type it down. Yeah, so 1 month is by, and we now need to recognize the fact that next month we will start with less prepaid insurance. Yeah, so let me just change the color to show the adjusting entry, and we have to recognize the insurance expense first and foremost, and that was in the debit side. Yeah, this is also an adjusted sorry, this is adjusting entry, so I'll change the color. Next, we have an inventory count shows 320 of cleaning supplies on hand at July 31. So at July, at the end of the month, they physically counted the supplies that they have left in their stocks, and they found out that their cleaning supplies, the balance now is not 900 anymore, but it is 320. Now, clearly, there has been some change. How does the reduction in cleaning supply happen? Is through credit side. So 900 minus yeah, 320 is exactly 580. So $580 worth of supplies have been used up. Used up means that they supplies, yeah, expense has to increase. It means that we've spent $580 worth of supplies and it's no more. Yeah, this is it. And lastly, accrued but unpaid employee salaries were $400. Accrued means that the expense has happened and we already have a salary expense account here. I can basically include it 400 here, showing that the expense has incurred, but it says that we haven't paid it yet. It means that our account payable has increased by 400. This is what we owe to our employees. Now that I've made all of these adjusting entries, and because my formulas are not automatic, I didn't really put in formula, I manually entered the balances, I will have to go through all of these to make sure that my balances are correct. So here, 6,900, yeah, plus 400. I have to change it minus 1,500, so the amount has changed. Now it's account payable 5,800. I hope I didn't make any mistake in calculation. Here I deduct this credit side. It means that in the beginning or at the end of the month, at the beginning of the next month, now I have less prepaid insurance, so I have less month left that I can use it up. Now I'll add also here into the revenue 7,900. Here I'll add this, yeah. Here I'll add 2,400. Again, I just skip the formula part, and these balances I'll just manually add in here to help me, to make it easier for me. That's it, and 5,580. This is it. These are the new balances, and as you can see very clearly, the cash account did not get affected. Another truck account did not get affected. Yeah, so in some cases, cash account especially does not get usually affected by adjusting entries. This is just how it is, because adjusting entries are not related to cash entries. They are related only to expense, prepaid assets, and what else, revenues. Yeah, so these type of accounts get affected. Now we can, yeah, I'm not removing it, I want to keep it. We will prepare adjusted, yeah, adjusted trial balance. We will have, you know, several more new entries here. Yeah, so I'll just insert them right away. Okay, so what we have here is cash remains the same, common stock the same, truck also. Account payable, however, has changed to 5,800. Cleaning supplies have reduced to 320. Prepaid insurance reduced to 1,650. Service revenue increased. We recognize the revenue. Account receivable 6,300. There is a change. 2,400 the salary expense incurred. Maintenance expense doesn't change. Dividends don't change, but we add depreciation. Oh, sorry. Did I actually make it bold instead of making it not? Okay. And depreciation. Depreciation expense is $180. Next, accumulated depreciation is also 180, but on credit side. Insurance expense that we incurred this month is also has to be, you know, recognized, and supplies expense has to be recognized as well as part of our adjusting entries, and that's 580. So this is basically it. Okay, so it seems that I made a mistake somewhere. Oh yeah, I didn't, hopefully. And this is it. Yep, this is all balanced out. The only reason why it wasn't is because my formula didn't catch the full extent of my new you know, adjusted balance. So once I fix that, the balance is still there. It's 25,880. That's an hour adjusted trial balance. So that's basically it. Now we already can see that we have finished up to the step 6. The only thing is left is to prepare income statement using this final the last adjusted trial balance that we've prepared, which is adjusted trial balance, and we can now prepare income statement. Now income statement is the report that includes such accounts like revenue and expenses, and we're gonna take those into account and include them into our income statement. Now, if I go back and try to find an income statement somewhere in the past that I've made, so let's use this one. I'll just update this one over there. Yeah. So let's use our income statement. Let's say this is, the date is different. It is July 31. July 31. Now, revenues or sales for us is 7,900, and I recognize it from this line, and I put it to my total 7,900 sales revenues, and that's basically, this is my revenue sales. Now, for simplicity, I'm not going to look into the cost of goods sold, although the cleaning supplies, the business is about what? Window washing. The cost of goods sold will be the cleaning supplies, and depending on the type of the salary, could be the salary expense as well. But since in our case, I don't know how much of this salary is related to those people who are actually providing the service, we're going to skip that part, and we're not going to add the salary to the cost of goods sold. Now, cleaning supplies, on the other hand, which we spend, yes, the expense of the cleaning supplies is 580. Yes, what is it? Supplies expense. Here it is, 580. I have to recognize in the in this line here. Yeah. So cost of goods sold. So to make this sales possible, I have used up cleaning supplies, and they were 580. This is how much I spent this month to make a revenue. Yeah, so my total revenue will be amounted to 7,900 minus 580, and that's my total revenue. Again, I'm pretty sure that the salary should be included to the cost of goods sold, but because I'm pretty sure that it doesn't specify here the salaries. Yeah, it says employee salaries, but it doesn't say what kind of employee. Is it an accountant salary? Is it a cleaning services guy salary? So again, because I don't know specifically the salary sort of differentiation in our example, I'll just go without it. Yeah, and I'll add the salary expense to the expenses account. So this is not related to our example. Now the expenses, very simple. We will look at our trial balance and see the expense accounts. The salary expense is here. Yeah, so expenses are salary expense. And that was how much? 2,400 has been spent. Then we have maintenance expense. Yeah, here it is, maintenance expense. That is 290. Depreciation expense. That is 180. Insurance expense. Yeah, I'll add 2 more lines because I think there is 2 more. Insurance expense is 150. And lastly, supplies. Supplies expense I already accounted for. Thank God I noticed it on time. Yeah, so the supplies expense were included in here. So cost of goods sold. I can actually write here supplies expense. Yeah, supplies. Okay, the cost of goods sold basically. Okay, what else? Did I forget something else? No, it seems that I have added all up. These are the total expenses that we have incurred this specific month. So I summarize them and I come up with an amount which is 3,020. Now net income will be total revenue minus total expenses, which is 4,300. That's our net income. Now we've also paid dividends, and we can show that below the income statement, dividend payment was 600. Therefore, our retained earnings is going to be net income minus dividends. That's 3,700. That's our retained earnings. We've prepared our income statement using our adjusted trial balance. Now we can prepare the statement of owner's equity. Again, I'll just copy the format. I don't need the all of it. I only need the format. I'll just be updating it. The statement of the owner's equity as of July. Yeah, so this is the beginning of July. And let's just type it into the end. Yeah, so we're preparing for July 31st. So the owner's equity in the beginning was 0. Yeah, they started the business in the beginning. Later they added in common stock. Yeah, let's insert that. Yeah, common stock was how much? 12,000. Common stock is 12,000. And I'll just increase this one. What else? We have net income, or in our case, retained earnings, because we paid dividends. Yeah, that's this amount. I'll basically reference it because I don't want to, the formula is wrong because it doesn't add in the common stock. So I'll add that as well. So our retained earnings eventually is going to be, not retained earnings, but owner's equity as of July 31 is $15,700. That includes common stock and the retained earnings. That's it. This is our statement of owner's equity. And lastly, let's go through the balance sheet. If I have it anywhere, do I? Let me see. Yeah, I do have it here. So let's just use this format because I'm so lazy. I don't like doing these entries one by one. So this is going to mess up my so let's just cut it and put it here. Okay, this is better. So the balance sheet, let's look. First we have assets, later we will look at the liabilities and equity. Now in the I don't want to mess up the formula, so I'll just remove this part instead. Now the cash we have here, cash information is right here. We don't need the colors at all, so let's look. 5,410, that's our cash amount. Account receivable, we have those, I think. Account receivable somewhere here, 6,300. 6,300 is there. We didn't have prepaid rent, but we had prepaid insurance, and so we can actually write that. Prepaid insurance 1,650. Printing, we don't have printing device here, but we have a truck. Yeah, the truck is right here, and truck is 8,000. But if we look at it, we have an accumulated depreciation, so we have to show it here. Less accumulated depreciation, which is 180, and I can better just minus it, show the negative. Yeah, so this will get deducted eventually. Let's see. So cash, truck asset, cleaning supplies we have, so I have to record that as well. Yeah, cleaning supplies. That's also assets, and we still have them. The remaining 320, I add them up. Let's see, yeah. And what else? Cleaning supplies, prepaid insurance, service, no. Receivables I put in there. This is expense accounts, has nothing to do with us. And that's it. The rest is, expense and accumulated depreciation I've already accounted for. So this is it. This should be a correct balance for the total assets. And hopefully we will have the same amount at the liabilities and equity. Otherwise, I have to look and search for that mistake that I made. Now, bank debt, we don't have any bank debt, but we have common stock, which is 12,000. We have retained earnings, which is 3,700. As you can see, we have found 21,500 for total assets, but our total liabilities and equity don't match. One of the ways to find out what exactly from this we have missed is to simply deduct 21,000 from I mean 15,700 from 21,000, so that's 5,800. And yes, you can immediately find that we have basically forgotten to add account payable, which is our liability account, payable to the liabilities, and adds 5,800. And as you can see, it immediately balances out. So we found we've completed our financial statements. We have built unadjusted trial balance, then we made adjusting entries and made adjusting trial balance, adjusted trial balance, and finally we built 3 financial statements, and they all are correct. They all matched up. We can check it through total assets, total liabilities, and so that's basically it. This is our assignment.